And good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Wednesday, January the 24th, 2024. Again, always interesting. And today's buildup was just a strong surge back into Netflix because of their earnings. We had a very strong move in NVIDIA, AMD. AMAT participated today. We saw some strength coming back into Microsoft and Meta. So overall, we again are dealing with the Mag 7 plus a few extra participants. So in both the S&P and the NASDAQ in particular, ran to new all-time highs. Of course, a lot stronger in the NASDAQ than it was in the S&P. But nonetheless, the S&P made it up to 49.33. Now, I did have resistance above all of this, and I felt that the third wave had very strong potential of getting up closer to that 5,000 mark, basis the future, to complete the wave three. But it kind of got caught in some downdrafts and got caught in just not really participating at a level I thought it would. But nonetheless, I think that what we got going on now is we have the ability to count the third wave complete at today's highs at 49.33. So with that in mind, I do believe, again, and counting it, that I have a 1, 2, a 3, well, let me just see, yeah, 4, and then 1, 2, 3, 4, 5. So again, we're heading lower, and what I'm going to be looking at is a minute fourth wave. So step by step, we continue to edge what I will say is closer to a larger correction starting. So that this, in terms of the big picture, we're looking for the completion of, number one, a minor fifth wave. And that's where that resistance comes in. So that's still valid. The 100% level from where minor wave 5, which is all of this, would be equal to minor wave 1. And that's at 49.92. We continue to have additional resistance above. Now I've taken down the additional upside for minute wave 3 if I'm going to be declaring it over at today's highs. So a lot of what was sitting in here is now gone, and it takes us up to the larger primary B wave resistance levels that sit above us. And those come in, start at 51.16, 5,116. Again, going back out to a minor fifth wave, if the 100% mark is exceeded, then the next level in terms of that fifth wave would be 1.618, which comes in at 51.71. So these levels remain in the picture. Now, what will help us a great deal is that once this fourth wave is complete, I'll be able to run again minute wave 1 over to the bottom of minute wave 4, and that'll give us additional projections up for the minute fifth wave, which in turn will complete the minor fifth, which in turn will complete the intermediate C wave, and then in turn complete that primary B wave. So we are inching our way to what I believe will be a completion point for something pretty large. Now, that's also putting in that this third wave is complete. What we have outside of all of this, believe it or not, is that the alternate would be it's a wave 1 of 3. Or we're still within this 5, and we will make it up closer to 5,000 prior to dropping. Now, I don't necessarily see that right now because of the intensity of the drop in both the NASDAQ and the S&P. But here we are coming into the second half of that extra hour that they get at the end of the day, and they're already starting to buy up the market. Likely IBM's earnings came out fairly stellar, Lam Research came out. Initially, we saw the stock drop, and then now it is significantly higher. I don't know how much they may have pulled it back or not. So that'll have an effect on anything happening within the NASDAQ. And so we continue to see that they're continuing to push NVIDIA after the bell. They are relaxing a little bit with Netflix, but still the stock closed up 53. It was up a lot higher, but that's still a pretty strong gain for a single day. So we're just going to have to take this step by step. So right now, let me just kind of see if I can bring this down so we can kind of look at some of the inside to all of this. And again, here's the whole three. And so we're coming off, and hard to tell exactly what the structure is going to be. But we're looking for an A wave. And so we've come down and we've touched 0.236 right there, and are bouncing off of that, as we should. Now, we've broken on the 30-minute chart, we've broken below the 8, the 20, the 50, and the 100. Coming back up, touching the 100. So just I was trying to look at internals here. I don't normally would trade off a 30-minute chart, although these moving averages continue to register accordingly. Now, quick look down on the 30-minute, the RSI got slammed, bottomed, and now upticking. We see the MACD got slammed, has not turned, still showing weakness, at least on the 30-minute chart. Bringing it back out to the hourly chart, and I could open it up again. It kind of looks like one big drop, and then this is the bounce. So is this going to be an ABC down, or is it going to be 1, 2, 3, 4, 5 down? Is that already in, or are we going to see some additional downside just before we kind of come in here, do a B wave, and then do a C wave? Most common retracement for fourth wave is 38.2%. That number is 48.62, I'll call it. Now, we will allow for additional, but I think if we're going to really expect to see some stronger upside pick back up again, then I don't think we should be going much further than 48, 62, 61, 62. And then we turn and we move higher in a minute fifth wave. But let's get through this fourth wave first. And so we could get an A, a B, and a C, bringing us back down to here. That would work. Or any variations thereof. Wave 4 can often start to form a triangle, which would just kind of keep it in a tight range, but it'll be an A, B, C, D, E, and then launch. Right? So let me do that again. A, B, C, D, E, and then launch. And likely stay within a tight range and edge. Not that it's going to trade all inside these particular parameters, but the A, and then the B, and then the C, and then the D, and then the E, and then it launches. So that will just take, in fact, as I normally will say, that type of a triangle in the current fourth wave position, it actually really is burning up more time than actual price. So if we were to come in a zigzag, A, B, C, then we're gonna do a little bit more price damage. But let's not forget that the fourth wave of one lesser degree is right here. And that low is at 48.75. So we're coming down, we're going to get lower than where we are, but still remain above the 382. So even if we were to come down to 48.62 or in this hood down here, I think that that's fairly reasonable, even though we still would be looking here for support. It may find support there. We could actually complete an A wave there, do a B wave up, come back down in a C wave, complete it, and then run. So again, I don't know if I'm necessarily be looking for this to complete 1 or 2 days. Sure, it can happen, but maybe it's going to take a little bit longer. So again, we're in a corrective phase. It also, people will consider it consolidation. And so with that in mind, we just trade in a tight range. So again, that's what I'm talking about, that it's actually just burning more time than it is price, but still would be considered a correction or a pullback. And that's whether it stays here, whether it drops down into this area here. So all in all, it wasn't the easiest of days, particularly in the NASDAQ, which just again saw the push-pull occurring within the component stocks that are within the index. And so it was a push-pull, particularly in the NASDAQ. Now, I found if you traded the Russell, so the Russell future, they were much cleaner. It was much clearer directionally that the whole index was, that this is where it was going. It was heading lower or it was heading higher. Whereas the NASDAQ would kind of jerk lower, come back up, jerk back lower, come back up, go sideways, go up a little bit more. It was all over the board and makes it much more difficult, particularly for day trading. So again, eventually they did get its move in, but it just continues to, again, build back up to the upside. We're seeing it more in the NASDAQ than we are in the Russell. Russell ended down 1750. S&P was down, now it's back up, but not overly higher. Whereas the NASDAQ is going to be trying to push up, trying to get itself back up plus 100. Moving averages. Let me just take a peek. Let's go take a look at the daily and see what that basically looks like for us. Let's go like this so we can look inside. You can see we had this great little bull run and then bam. So, but we haven't broken any. Here's the 8, here's the 20, here's the 50. Now, to really kind of start to put in that this is all done, you'd really be looking for this to kind of start breaking, first of all, below all of this support, and then start to break the 50. That's not in the picture right now. In fact, on the daily, here's what we're looking for, 48.62. So is this going to be an A, a B, and a C? And then we still hang in the upper and not really threatening the 8? I believe so. And if that is the case and we can hang out at the upper levels, then yes, a move towards 5,000 is absolutely realistic, possible, and most likely should be expected. So that's the daily. Moving averages all basically still in alignment. Again, the 200 and the 100, see, they're kind of laggards. They're really kind of moving flat. RSI kind of turning flat right here. Reflective of the market, sort of. The MACD, non-response, even though we moved to another new all-time high. Here as well, we moved to a new all-time high. Could not really get itself over into overbought. So these are interesting things to me, particularly when we're at new all-time highs. So that's the S&P. Let's go over and take a look at the NASDAQ. NASDAQ was the wild child today. I will share that. Now, off of its high at 17,793, it dropped to a low of 17,569, or actually, 569. It dropped over 200 points off of the high, which it basically was getting ready to touch. Well, it touched twice, once at about noon, and then again at about 1 o'clock, or it started up there, I should say. And then we started to move lower in a corrective manner. The fact that those levels were from more, clear, they were rejected, and we started to correct. Now, a 200-point move down off of the high does give me more strength in putting the completion point for my new wave 3 here. We did run again. We did run to an additional new all-time high. We did push into very uncharted water. In fact, you can see it's all by itself up here. So it gets to look a little bit lonely because there's nothing on either side. So I did label it wave 3. Wave 4, most common, comes within the price territory of the previous fourth wave of one lesser degree. And here it is, right here to here. Most often, we would be looking for it to come closer to the low, which is 17,404, 405. Full bore, if it comes to 0.382, 38%, that's 17,372. Now, on the hourly chart, we're coming down. We're getting close. We're perked up off of it, but we have the 50 at the 50 moving average, the simple moving average, on the hourly chart at 17,555. A little bit 4 3/4, but you can move it up to 55, and that would be pretty reasonable. Now, of note, hourly chart, still same deal. This is where the RSI topped, and that was on January the 21st. Then we went through this corrective phase, and then we rallied up to substantial new highs, at least over to where this one was. This was 17,563. We've already come back down and tested it. So we've touched the top end. One move, we touched the top end of the fourth wave, which would have been here. Now, this is the fourth wave of one lesser degree. That low comes in at 17,404. If we can get it all the way back in, again, it's down 200, off the high, going to be just wave A, then we do a B wave, which maybe brings us back up to the 8. So close to 17,695, maybe a little bit higher. Again, I could break this down, and let's even take it down to a 30-minute, maybe even lower. And you take a peek inside. There's the high. See, we don't really get greens. It's still down in here, so it's not a 1, 2, 1, 2. So it becomes a little bit more difficult to determine the actual structure within. I mean, I could put it down to a 15-minute chart and take a peek inside. So we get 1, 2, 3, 4, 5. So yeah, and almost on the 15-minute does look like you're gonna be able to get a 5 waves down. And so again, taking that back out, that would suggest that we get a zigzag, A, B, C. So we're going to be looking for it at least 17,409, if not the full board down to 17,372-ish. Then look for 50%. Here's wave 1, which is sitting right below 0.618. So definitely not looking for it to go that deep, because then if it does, this is not a wave 4. It's going to something else. And it could start signaling a lot of different things. So as within the S&P, wave 3 is now nicely the longest wave. In fact, you can just count that, 17,793. And we will then take out 16,689. So it's over 1,000 points. Wave 3 over 1,000. We always do that little comparison where we take a look at wave 1, 17,048, and we're going to take out 16,334. And that's 714. So wave 3, beautiful, beautiful. Well done, NASDAQ. Wave 3 is the longest wave. We can get this 4, and now wave 5 can also really explode higher. It can subdivide and get itself pretty much above 18,000, which is our first marker for that irregular B wave. And that is 18,060. Then we have for minor wave 5, our next level up there, since 100 had already been taken care of, it's gone. So I'm going to remove it from the chart to show that that's been met. So accordingly, the next Fibonacci level for the minor fifth wave is 18,377, I'm going to call it. So those levels, of course, are going to be 300 to 500 points higher from where we reached today. So first of all, we're going to track this ABC. I think it will be a zigzag. which means we're likely going to be getting down to that 17,372 or at least to 17,409. Those would be my expectations. Here again, let's take a look at the RSI. Here is where the market reached. You can see it. If you watch my cursor all the way up, that's the high, 17,793. It is a lower high, not by a whole lot. So the NASDAQ, yes, on a strength process or strength reading, the market's internals were pretty strong. Can't say volume was really strong, but the price moves were strong enough to keep that RSI engaged to the upside, unlike the S&P, where we saw a lot of divergence. Very slight divergence for the wave 3. And again, wave 3 being the longest and the strongest, you'd always look for a little bit better. And the drop-off, very strong, at least on basis of the hourly chart. Very strong drop. Here's the one that absolutely kind of floors me. Again, we had the MACD reach its high back at the mid-January. Yeah, oh, actually, not even. January the 21st. So last Friday is where the MACD topped and started to roll over. So here we have a secondary at the high of 17,793, but much, much lower. Granted, we came down and basically getting ready to test this level, but still turning pretty sharply lower, this turning pretty sharply lower, which would suggest we still have additional downside to do, but maybe we get a little bounce out of this, and then it reverts and comes back down. Now, tomorrow, first let's take a peek at the earnings calendar, and let me see what I may or may not have for you for tomorrow. Tomorrow on Thursday, we've got a lot of good stuff. We have Intel, Visa, Clack, Cap One, T-Mobile, Levi's, L3 Harrison, Western Digital. Those are all after the market. And then before the market, we have American Airlines, Next Era Energy, Alaska Airlines, Southwest. So tomorrow's the airlines. Next Era Energy, Humana Insurance have not been doing really well. We have Dow Chemical, and we got a couple of Union Pacific, and then I'm not sure who this is. And those are all before the opening. So I know that there's likely additional. And so we'll go over Fridays tomorrow. On Friday, all those happen before the market opens. So again, after, we'll be paying attention to Intel. Visa, of course, we'll take a look. Intel and Clack is kind of interesting. And that's really about it. Western Digital, I'm not really sure even if they're in the player anymore. And so we'll keep an eye out and see what happens tomorrow. And then in terms of earnings, not earnings, just economic data, I'll get it correct eventually. On Thursday, we've got another slew. We've got the fourth quarter GDP. We have initial jobless claims, durable goods orders, all the things that go along with durable goods, which is durable goods minus transportation, advanced U.S. trade balance in goods, advanced retail inventories, advanced wholesale inventories, and then at 10 a.m. Eastern, we have new home sales. All the first whole slew of data will be coming out at 8:30 a.m. Eastern, 10 a.m. new home sales. Right, that is going to do it for today. The next update will be on Thursday, January the 25th.